Everyone, hope everything is going well. All right, before I begin this video, I do want to say that disclosure, I put a put option or I placed a put option in IWM, should be expiring next year. And I also bought a RUT put option. Not that it's material, I do want to make sure, just for conflict of interest purposes, I want to disclose my position so you understand what's going on. But ultimately, here's what I see. Shout out to JC Peretz again. Great analysis. I guess I'm going to be shouting this guy out a lot because his charts are pretty damn good. And I also saw a similar analysis from Avi Gilbert saying that he thinks that there will be a top soon, and we could take a look at that as well. Let's look at this Avi Gilbert. You can just look at his recent article, and we could just go there. All right. So let's take a look at this. So let's look at what JC Peretz has to say. He's saying that small cap indexes haven't been able to make any progress at all, and he wants to look at the two popular indexes, small cap 2000 and S&P 600 small cap index. Obviously, Russell 2000 has 2000 stocks, the other has 600. What's the difference? According to S&P Global, unlike the Russell 2000, the S&P 600 uses an earnings screen. Companies must have a track record of positive earnings before they're eligible to be added to the index. So when I look at that, I look at, okay, S&P 600, you need to have top line growth. All right. Positive earnings. All right. Positive top line growth. Okay. Russell 2000, not so much. That's why I've noticed that, you know, right before a recession happens, the Russell 2000, you'll probably see signs of cracks in it. And I think we're seeing signs of cracks right now. And we have a negative yield curve for quite some time now. And let's take a look at this. He looks at this chart, Russell 2000, slightly higher since November, not too much. Small cap index, that is very interesting. It's actually gone down with top line growth. That is very, very interesting. If you look at it, December 1335, 1300, S&P 600. Okay. If you look at the Russell, the last 6 months, 2066 in December, 2065. So slightly down from the closing day because the intraday, I think a couple days ago, it did get to like to 2011 or something like that. So that's interesting to note. So he's seeing divergences in the small S&P 600 versus the Russell 2000. And he looks at one of the leaders that is above the December high, industrials, small cap industrial PSCI, that's going up. But if you look at the RSI over here, momentum or the RSI oscillator, that's going down. That is not good. Okay, let me go back to that article. So the leading index, you're seeing a divergence there as well. Okay, that's a red flag. And then he shows graphs of the small cap Russell 2000 versus the value line geometric index. All right, this is and it shows like it's been there over the past few years. Very interesting that it's like trading in line. I want to maybe do I should maybe do a correlation between the value line geometric index and the Russell 2000. That line looks very similar. Wow. Very interesting. Regardless, I'm gonna now look at Avi Gilbert, and ultimately, I want to look at his article. Cracks may be starting to appear in the bullish armor. And I got an email from his newsletter. I don't pay for it, but like I'm on the email list. And he said that they said that, topping pattern or something like that. But let's take a look at the analysis. And he talks about, okay, um, some of his analysis out there, but he's seeing many analysts suggesting the market has much higher to go. In fact, one chart which has me extremely cautious, the Russell Index is viewed by as many as having at least another 15% to go. He's been focused on IWM since late 2023 when they were expecting the rally from 160 to 203 to 214, even as high as 225, even when we bottom, as you can see from the chart. And he's looking at the charts right now, and he thinks that this thing, as long as it's below 214 and it goes to the 194 level in the coming weeks, he thinks there's going to be on a crash alert. Wow. I put a put option on it because I don't like the price action in the Russell 2000. I don't like what's going on in the macro. I know I could be a little early, but I gave myself some wiggle room out there. And, there are options, so I'm not going to lose the whole premium associated with it. So it is what it is. Two good technical analysts, JC Peretz, Avi Gilbert, giving warning signs on the Russell. So I would listen to them. Once again, you do you. Do whatever you want. Don't listen to me. Do your own research before making any decision whatsoever. Follow everyone, but you do you. Do what's best in your interest and your financial situation. All right. Anyways, and also, talk to a financial advisor to see what's good for you. All right. Anyways, I'll talk to you later. See you. Bye.